Hi everyone, hope you're all having a great day today. In today's video, I'm going to cover BlackBerry stock. The reason why is because according to some articles out there, they're stating that BlackBerry secures $200 million through Convertible Notes Offering. This is not on BlackBerry's press release. They have not posted it yet. But I think the reason why they haven't is because they kind of addressed it in the last press release, and I'll go over that as well. But if this does get converted in the future, it's going to equate to about 68 point something million common shares upon conversion, according to this news posting, right? Now, the reason why I'm covering this or posting this video is because the stock did act negatively based off this news, and I'm going to explain why. So I'm going to explain the benefits, the pros, and the cons, and the cons is going to reflect mainly about the stock. And if you go to press release, again, it's not there, but I'm going to go to the last post because it covers some of the stuff. Again, like always, I'm not a professional, so please do own due diligence and research before buying and selling. And I do own shares in BlackBerry stock, so keep that in mind while you're watching this video. Now, the reason why I'm saying that they already kind of covered this in the last press release is because they stated that $175 million is basically secured, and it could be potentially $200 million if the last institutional investor decides to up an additional $25 million. They didn't say necessarily, let's say, last institutional investor, but from when I broke it down last time in the last video, it sounded like there was potentially, I think, in my opinion, two institutional investors. One of them decided to do $25 million. The other one stated that they will decide later on, which they have according to the news articles, if true. And since it's $200 million after fees that BlackBerry said that they'll cover, BlackBerry's left with $194 million. The benefit for convertible senior notes for these lenders is they get interest rate back, but it's a low interest rate. But the benefit is hypothetically coming into buying these shares in the later date, not buying them, but converting them. So these are convertible senior notes. The amount that they lend out could be converted into shares that they've agreed upon a certain amount during this agreement, and without impacting the stock in terms of volume, because the stock has a low volume share volume per day. So them coming in could increase the price dramatically, and them trying to get out would drop it dramatically. So it's kind of difficult to get in. So the thing is, they're not coming for an interest rate. The reason why I'm mentioning this is because the negative is dilution, and that's what impacted the stock, and I want to go over that. So they're getting 3% interest rate on this loan, and most times for senior notes, again, and I stated this in a previous video, lenders are not coming in for the interest rate because this is not attractive. 3% is not attractive, especially in today's market where the Fed interest rate in the US side is 5 to 5.5% interest rate, right? And like I stated, for BlackBerry, this is great. 3% is awesome, is because essentially at the end of the day, this is free money. And what I mean by free money is if you could take this money that's lent to you for 3% and then just invest it elsewhere and get 5 to 5.5% interest rate, you're profiting net profit of 2 to 2.5%. So it's essentially free money. The reason why lenders are doing this is because to ultimately convert their shares in the future. Now, the reason why the stock, or actually, I'm going to cover the positive and then go to the dilution part. The pro for this shows that if it is two institutional investors, like I'm stating before, is that these investors, they added an additional $25 million into their investment. That shows to me that they believe in the company to bring a better return than current price, because the conversion price is relatively pretty much right now, like at the price we're at, right? Hypothetically, I know it's at $3.88, but like after time, so on and so forth, investment, it's very close to where we're at right now, right? Hypothetically. Now, in terms of the negative though, the reason why the stock dropped is because originally it was $175 million, right? Now we're at $200 million. That introduces an additional $25 million worth of shares as dilution. The current shares are going to be diluted when the conversion happens. Now, that's not just like, for example, my shares or your shares. That's every shareholder, everybody who owns shares in BlackBerry, right? Unless there's a clause in there that, for example, some of the owners, their shares won't be diluted by additional shares that are introduced, but I doubt that. I haven't heard anything about that. So that comes across the board. So Prem Watts' shares, so on and so forth, will all be diluted. So I'm assuming this obviously was all agreed upon, and so on and so forth. So the positive is the institutional investors coming in believe in the company. At the same time, this introduces additional dilution, that $25 million extra from 175 to 200 million, and that's why the stock dropped. But this is my opinion. Please do your own due diligence and research before buying and selling. And I believe that's basically it. Again, it's on 3%, conversion's 3.88, and they got 200 million, which remains 194 million after fees paid off by BlackBerry. And the conversions will be done in 2029, February, if I'm not mistaken, February 15th, I think somewhere. February 15th, but 2029. And yeah, that's basically it. But yeah, hope you guys liked the video. Hopefully you guys enjoyed it, found it beneficial. If you did, consider dropping a like, helps out the channel. So thank you so much for that. And consider subscribing so you be notified the next time I upload or even stream the conference calls and all that stuff. Thanks again for watching, and I'll see you guys in the next video. Peace.